Hello everyone. Our today's topic for discussion is foreign currency transactions in SAP. What is the need for foreign exchange transactions? Today, we are working in global environment and the transactions are not restricted to one country. We may have vendors, customers, holding companies, subsidiaries, and other joint ventures across the world. Therefore, foreign exchange transactions need to be maintained properly in accordance with the principal policies we are obliged to follow. SAP gives flexibility to deal in foreign currency as much as we want. Let's see the ledger settings. There I would be explain you properly what are the currency type. Now, one more thing in SAP ECC, we only had three freely defined currency, but in S4HANA, we can define up to 8 currencies. Let me show you everything on SAP software. Let's log in first. Let me go to the configuration screen. We have already discussed the ledger settings, and under that ledger settings, there were currency types. I will show you right now how the settings for currency types look. So under financial accounting, we have financial accounting global settings, we have ledgers, and under ledger, we have defined settings for ledgers and currency types. So we have discussed settings for ledger. We defined 0L ledger as a leading ledger and other non-leading ledger. And now I'm going to show you the currency types. So now these 8 currencies, these 8 freely defined currencies are defined in different screens. These are the currency types. We can define a new currency type as well, but SAP has given 8 freely defined currencies in the systems. Like 00 stands for document currency. Then we have 10 as company code currency that we assigned while creating our company. Then 20 is controlling area currency. We assigned 20 while creating controlling area. Then 30 is our group currency, 40 is hard currency, 50 is index based currency, 60 is global company currency, then 70 is controlling object currency, like we can change our controlling object currency as well. Then 80 we have ledger currency. So these are the freely 8 defined currencies that SAP has given us. Now, do not confuse it with the currency key that are system defined as well, and they are defined according to the countries in which they are operating. So like India, we have INR, in USA, we have USD. Coming back to our topic, the currency type. So we have seen the freely defined currencies, 8 freely defined currency. Now, how it is shown under our ledger settings, like under ledger, we have a leading ledger O0L. Then our company, let's find our company in 0L. So ISH1 is our company. So like these are the freely 8 defined currency. And as we have defined our local currency as 10, 10 is our company code currency. Then our global currency is also INR, that is 10 is our current company code currency. Okay, so 10 denotes company code currency. So these are what this was a currency type. Now, there are 3 options for conversion. I hope the currency type is clear to you people. Moving ahead with what is options. So we have three conversion options. Conversion options. We have three. Uh, number one, number one is bank buying rate. Number two is bank selling rate. And number three is average. What is bank buying rate? Um, Bank buying rate is the rate at which bank buy from an entity. Selling is the rate at which banks sell to an entity, and average is average rate of both buying and selling rate. Now, for example, if we have a foreign customer, we receive consideration in USD. Now we need to sell that USD. At what rate bank would buy? Bank would buy at bank buying rate. Okay. And in case we have a vendor, we need to make payment to that vendor. So we need USD in order to make the payment ahead. So, sorry. So at what rate we would purchase? We would purchase at the rate bank will sell. So bank selling rate would come under existing in this case. In SAP, we have letter G, that is denoted to buying rate, standard buying rate, letter B to selling rate, and letter M at average rate. So this is what system defined keys are in SAP. Now, in SAP, we maintain the exchange rate in two ways. These are the conversion options. Now we are moving ahead with the exchange rate ways. So there are two ways. Number one is direct quotation, and the other is indirect quotation. Now, what is direct quotation? Direct quotation is foreign currency to, this is a conversion rate, foreign currency to local currency, and indirect is local currency to foreign currency. So that means 1 USD, that is a foreign currency, equals to, for example, 75 INR. But in this case, 1 INR would be equals to 1 divided by 75, that is 0.0133 USD. So this is a direct way, and this is an indirect way. This an indirect way to maintain exchange rate. Fine, there are two rates. Therefore, so one pair of currency we can maintain either of the two ways, direct or indirect. So let's begin with the basic settings. We are already on configuration screen. So as the settings for foreign currencies are standard, they are not company specific. Therefore, we maintain it under SAP NetWeaver. We go to general settings. Under this currencies, and the first thing we have to do is to check exchange rate type. So let's check the exchange rate type. What were the three type of exchange options we had? We had GBM, that is buying rate, selling rate, and average rate. Let's see, are they defined? Yes, SAP has already defined them. So B is for standard selling rate. Then we have G for buying rate, and then we have M for the average rate. So they are already defined. So we are not required to define. In case you need to define your own type, then we can just go to a new entry and define our own type. We are not doing it right now. The next thing we have to do is to define the translation ratio for currency translation. Let's start a new entry. From USD to INR, because we are going to maintain, like we can maintain both direct and indirect quotation. So valid from today, today is 29, 1:1. Now, what is this translation ratio? This is a relationship between the minimum units of two currencies in the commercial usage for conversion purpose, right? It is always 1:1, but there is one exception, that is Japanese yen. In that case, 1:100 means 100 unit considered for each transaction. So as we are just maintaining one foreign currency, that is USD, so we are just assigning 1:1 ratio. Again, B INR to USD from 29th, 1:1. Again, I have to give G USD to INR from today, 1:1. Lastly, for M, USD to INR. I think I've covered it all. So now let's save it. Moving ahead, we have to enter the exchange rate now. So let's enter our exchange rate. So we are maintaining direct quotation here. Okay, let's do the new entries for B, that is selling rate, valid from today. Now from would be foreign currency to local currency, that means USD. Direct quote would be for selling rate is 76, I would keep, to INR, right? The next I have to maintain is G, 29. Again, USD, I would keep 74. Now, our buying rate would always be lesser than the selling rate. Why? Because bank would sell currency at more value than it buy. Okay, so I'm keeping my buying rate as 74. It's not my buying rate, it's bank's buying rate, INR. And let's keep M, that is average, on average only, applicable from 29th, USD 75 to INR, right? Done. So now it's saved. Now I've maintained the exchange rates. The next thing I have to do is basically the basic settings are done, but In case we have to maintain various pair of currency, then we can maintain a work list as well. I'll just show you how we maintain a work list. Number one, we have to define a work list. Let's define a work list. So we are not involving many other currencies. We just have one currency, that is USD. But let's see, let's define a work list. ISHL work list. Text is work list for ER. We have to maintain it on daily basis, for example. And here we can also add tolerance. We are not adding right now. Let's save it. Then we have to assign exchange rate. Let our exchange rate be M. From USD to INR. Our work list is, and our quotation is direct quotation. Now from where we have not entered any exchange rate here in Worklist. In order to enter that, we have to go to our SAP Easy Access screen. Okay, let's go to our Access screen. So in accounting, we have financial accounting, journal ledger, we have environment in it, and under current settings, enter currency exchange rate using Worklist. So as we have created our Worklist, so let's select it. Let's have a view. So it has automatically took 75 as our old ER rate from from where we have entered our exchange rate, right? In case we want to change it, we can just edit it. We'll edit it later. Before we will post, before we just post one entry and try what rate of exchange our journal entry is taking, and we'll make some necessary changes here and then again try to post another entry. So I'm keeping it. Okay, so our basic settings are done. But before that, for GL posting, we can select the exchange rate type in each document type. Let's see that in document type, we have defined our exchange rate or not. Let's see that setting as well, SERO. So document type we have to see. In order to make a GL entry, let's see SA document type. So in financial accounting, okay, global settings, we have documents. Here we have document type. SA is our document type, right? Now default value, exchange rate type for FC document is M. It is coming out to be M. And we have defined ₹75 for M as far as I remember. So let's post an entry using this. By F-02, 29th is today's date. My period is not 9, it's 6. Someone else company has opened. So ISH 1. Let keep currency be USD because I want to post the transaction in USD only. Let's enter an office expense. $100. Office expense. Posting key would be 50. Let's enter star. Text would also be same. Let's simulate the document and see the entry. $100 is $100 is there. Let's post it. So my document number 12 is posted. In order to see at what exchange rate it has got posted, FBS into 101 is my account. All items. So now, see the document 12 posted at the rate 75. Why it took rate as 75? Because I specifically mentioned in my document type essay that while doing journal entry, the document type has to take M as foreign currency document exchange rate. So that is why it took 75. Fine. Now, one thing, let's do one more thing. As we maintain our work list, okay. So in environment, let's change our type valid from 29. Let's latest my exchange type. I want to enter as 78. Okay. No. I think it will not take because our rate of exchange 75 is today's. So in case I enter if I enter a different rate, my entry should have gone posted with a different rate. I would not be able to show you that because I've updated the settings today only, so I cannot change the settings today. So we have to skip it. Now there is one more thing I want to discuss, that is OBY6. Here all the company's parameters we can see at one place. Now let's find our company. Our company is ISH1. Okay, I am not able to see my company. ISH. Here it is. So here I can see all the parameters here. So I can at the time of posting a journal entry, I can even change the exchange rate as my defined exchange rate is M, that is 75. But I can at the time of entry, I can even mention some other rate like 72, 74, because maximum exchange rate deviation is 1% allowed. That means as my acceptable rate is 75, 1% My acceptable rate is 75. I mean to say into 1%, that comes to be 0.75. So either I can enter a rate that is 1% plus this, or 1% minus this. Let us try. We cannot post 74, है ना? We can only post 74.25. I will show it to you, as I've given 1% as my maximum exchange rate deviation. Let us post one entry and see. So F-02 29 INR USD. Let's try to post beyond our tolerance limit. 75 is it? Let's try to post entry by 76. 76. Let's try. Okay, I have not defined it. I need to go back. $29. I'm taking USD. Now let's take rate of 76 rupees. Now see, exchange rate 76 deviates from the table rate 75 by 1.33%. The allowed percentage is only 1%. So I can, let's consider this 75.7. Let's take 75.7. 75.7. Now in 75.7, let's enter. Let's enter 75.05. No, they make entry in form 9.999. Okay, okay. It would not let me take, because the percentage we have kept is very, very, very low, 1%. So somehow we have to consider 75 only. I hope you got the concept. I'm not doing any journal entry for that, but hope you understood the concept, that why that tolerance is kept. Therefore, it was absolutely an easy explanation, as we cannot force uh, taking our own rate. Or we could have posted the entry by taking our own rate, but that should not deviate upwards or downwards, as we defined here. We defined 1% there. Okay. So that was the foreign exchange transaction concept in SAP. We also have the concept on unrealized gain and profit that we'd be covering in other sessions. So that's all for today. Thank you all for listening.